I say all the time, there's no such thing as passive income, only passive losses, right? Passive income essentially means you're giving over your property to somebody to deal with and have a good day.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I am your host, as always, Yonah Weiss, and today we have a special guest. We have Mr. Shlomo Chopp, all the way from New York. How you doing?
I'm doing good, Yonah. How you doing?
How you doing? It's amazing to have you on the show. It's quite a pleasure. We've known each other for a while now, and bringing those online friends to life is always quite a pleasure. But I'd love for our listeners who may not be familiar with you, just to give a quick background on who you are, how you got started in the real estate world, which is really the common denominator of this podcast.
Sure. Well, thank you so much. I appreciate you having me. So my background, I guess my life has been necessity, has been the mother of invention, and invention has brought about necessity, if you will. So I'm a yeshiva guy, went to school in Brooklyn here, and then decided I wanted to go to work. I went to college, took a few courses, dropped out. Wasn't for me. I don't know why. It's doing well, but it just didn't work out for me. And I was like, okay, let's go make money. And I went in to sell flooring. Then I went to sell kitchens. And then when I was selling flooring, there was a guy in my building that was buying and selling shopping centers. And I got a little familiar with it. And the more I dealt with him, the more I said, okay, this is an interesting way to build wealth. You get into real estate, you can build wealth quickly, it would seem. And that's what I focused on at the time. And, after I was in the kitchens for a bit, I was hired to go in to do software sales. My dad's a computer programmer. I used to help him with stuff. So I was doing software sales for Iris Lotto, which had a real estate software. So I got into mortgage brokerage and real estate brokerage offices. And I'm seeing how they're operating their businesses. And it gave me a really interesting perspective. And the long story short is that over time, I decided to get into the real estate game. And 2010 came around and the real estate game came to a complete abrupt halt, more like 2008, 2009. It came to abrupt halt, and was able to build on my thirst of knowledge and thirst of data and thirst of information to be able to establish an expertise within the structured finance space, which is rare if you're not working for an institution to be able to understand that. And once I was able to dig into it, my background led me to really read through documents to understand them, which gave me the real flexibility to understand all the moving parts. And since then, I've been not only investing in the structured finance space, but also advising borrowers that have distressed assets and helping them work through that. So that's the origin story, so to speak.
Yeah, I mean, it really takes you through kind of that progression of, selling and then learning about certain things that sell better and coming in contact with real estate. And the world of commercial real estate is vast, but when you niche down, and obviously that's what you've done and excelled in it, that's really where you find, the riches are in the niches, and that's how you can come out on the top end. But I'm curious if you can just expand to maybe some of our listeners who may not be familiar with what structured finance is. Obviously, it sounds like, we're buying properties, we're financing properties, having to do with debt, maybe different parts, moving parts in that. Mm-hmm. And you mentioned how it kind of took off after, obviously, what you went through, the great financial crisis. And now we're kind of going through a similar thing now. I'd love to hear your thoughts on those two aspects of it.
Yeah. And you made a good point about riches being in the niches. And I think it's important for people that are more junior in the marketplace to understand that just because you're going for a niche doesn't mean you can't do more. So when you niche, you create expertise, but then once you've created expertise, you can then branch out, right? You can never, if you start too big, then you're all over the place, you don't gain expertise, which means you really aren't able to create much value. So my history is basically the way I sell. It's not to be a smooth talker. It's to provide expertise, right? So some people say you make 100 calls a day to sell a commodity. You'll find the guy to buy a commodity. My thing was like, no, I'm going to be an expert at what I do and try to bring them in. It was a little longer of a journey because if I would have sat on the phones all day as a broker, I could have sold, I could have made money that way. It's a little bit of a journey. The difference between finance and structured finance is very simple. If I say, Yonah, give me $5, I'll pay you back in a week. I'll pay you back with, 10% interest. Then I pay you back 10% interest. It's regular finance. Structured finance is give me that $5 and you go to five of your friends and say, listen, here's the deal. He's going to pay me 10% interest. I want you to lend me $4.50 of the five that I'm giving to them, and I'll pay you 7% of that. So you're going to make a profit margin in between. It's structured, right? It's more, and then the documents are essentially structured in a way that allows the borrower and allows the lender to be able to understand the moving parts if they actually focus on what they do. But more than that, allows the lender to protect their downside. So where structured finance becomes really interesting is that you'll get more proceeds because while if I'm a bank, if let's say I'm lending you my $5, then I basically say to myself, okay, is this guy worth the $5? Is this guy not worth the $5? And I'm good and I'm done. If I'm structuring it, I'm bringing other
Right.
people in, then I state, how can I get those $5 back to that person? And what's the worst case scenario to get it done? So now I'm a broker. Now I'm trying to figure out a way to go from here to here. So it's not just my risk. Now I'm trying to figure out how do I pay those guys back? So while I'm actually looking for greater protections to protect giving them money back, I also could be a little more creative because my incentive is to make the loan more than it is actually to collect that loan. And really, not to say that they don't want to collect. Of course they want to, because the business relies on that, but it's all about the fees of it, the fee generation. So while your margins go up when you lend less, the amount of cash that comes in net is going to be less as well, because a lot of cash is going to other people, which means you got to do more volume, which means it explodes. Point is, this is how a system grows, and then pops.
I mean, isn't it like most banks are working on this kind of structure? I mean, they're taking money from one place and really, from the depositors and lending it out to others. I mean, isn't that essentially how all banks work as well?
Yes, it is. However, the difference between structured finance and bank lending would be also in the way the lending is structured as well. For example, if you come to me, you have $1 million NOI on a property, you want $10 million, that's a loan that a bank would give to you, right? But if you come to me and say you have $1 million loan, but you want $11 million, the bank may not give it to you, right? But the bank would say, but a structured finance guy will say, I'll give it to you, but there's risk in that tenant, which is why the lender wouldn't give it to you. So what I want to do is, in the event that tenant vacates, I want you to give me all the cash flow, or the tenant says they will vacate, give me all the cash flow for X period of time to give me enough money to re-tenant it. So I believe I could get you. So we structure around all things. We structure around the syndication of it. We structure around the borrower side of it. And that's a structured finance. On the bank side, the whole financial institution is structured, right?
Right.
You look
That's
to
what
the
I
Federal
mean.
Reserve and everything like that. But the loan itself is more very simply, I'm lending you money, giving back the money, that type of structure.
Gotcha. And I mean, you kind of alluded to this, but are you seeing nowadays this type of financing being used much more than your traditional kind of bank loans, being that interest rates are so high? I mean, where is it that you're finding the most value for your company in terms of finding people for these type of deals?
So on my side, we don't really originate the new deals. We really solve people once they're in these deals already. But I'll tell you what banks are doing to a certain extent is that when you do structured finance, and I said, like, let's go back to the example. You lend me $5 and you sell $4.50 to other people, right? If you structure it that your first guy, you'll give him a 3% return, but he gets the first money that comes back, and another guy gets 4%, but he gets the next dollar that comes in. You structure it that way. There are banks that are actually putting money into that higher level because they have a short. So they're taking less risk. So they're basically taking the first and second dollar. So a lot of banks are going into the structured finance, which is empowering funds who want to take greater returns to actually recycle that money. They could charge a higher rate, but on a blended basis, they're getting 3-4% money here for this absolute great return, right? And at the bottom, they could charge 18 for a little piece that they put in,
Right.
and they make a killing if they do enough volume, right? So that's sort of how it does. That's how it works out. Now, in structured finance, especially securitized finance, which means the loans are put into individual components and sold out to the market to be traded, it's public information, right? Because it's traded. So if I want to be a trader, I got to look online to get something. I look at Bloomberg. TREP is a great resource. They have all this stuff. And, obviously we're friends with those guys, but they have this data and you can see what's going on there. So that's how you know what's happening. As to how I find these people, I need to do more outward business development. I don't do a lot of that. Most of it is incoming. So most of it is either by referral basis or someone heard me say something online they thought actually was smart and they're like, okay, let's give this guy a call. And that's where we go. So I appreciate this opportunity, Yonah. You're going to make me look smart. That's for sure.
Exactly. And certainly anyone who is listening to this, we'll make sure to put in the show notes and talk about later on where you can actually find Shlomo, besides for the, the social media, but his company. And that's important because, like you said, a lot of it is word of mouth, is referrals. People hear you. You do a lot of speaking at different events and things, and provide tremendous value online also with a lot of the posts that you're busy with on a day-to-day
Yeah,
basis.
I try to make it something that someone could look at and say, you know what, I had that problem. There's a way to fix it, right?
Mhm.
That's it. And that just creates value. There's enough room for everybody.
Absolutely. Absolutely. Now, you have done, a tremendous volume throughout your career, right? Nowadays, I mean, you said you're in the business of really helping solve problems, which is a great business to be in because when you solve someone's problem, they are like, they're in love with you basically. You've saved their
Well,
life to a certain
yeah.
extent, and so
Yes.
it is extremely beneficial when you can kind of be in that position. Where do you see the biggest problems right now that people are kind of faced with in terms of over leveraging or what's going on? Which different types of asset classes are the most distressed, or where are you seeing that?
I think that the stress is present across almost all asset classes, maybe not yet in industrial necessarily, but office for sure. Multifamily has a lot of issues, not because the asset class is in trouble, just because people over leverage it. People try to either buy properties they weren't equipped to operate, or buy properties that they expected would appreciate in value that didn't appreciate as much as they thought. There's still some distress in malls. Retail's really undergone a huge transformation, and it's still transforming. It's going to be really interesting to see how it plays out. Hotels are having challenges, especially with lower business travel. There's lots of different challenges. Of course, office, and we don't have to get into that. But the problems that I see for the most part come from a period of overexuberance, is really what it comes down to. And they manifest themselves in very different ways. They manifest themselves with people that aren't qualified to take certain loans, take those loans. It manifests itself with people who are just like doing deals and they don't focus on what it is that they're specifically doing or what the requirements may be. And then they trip up certain things. And then, they manifest itself in not understanding. A lot of people don't understand how to operate a property in a structured finance world. It's very different from how, our grandparents, let's say, would operate a property compared to how we need to operate a property. They operate a property, you collect rent, you pay your bills, and you give the lender his money, have a good day. Today, you need to operate it a certain way, pay the bill a certain way, and give the money to the lender a certain way. And if it's not done on the specific day, in a specific manner, and then you could literally lose your property over technicality, because what happens is the lender gets upset that you're not following the rules of the game, in which case they believe you're a greater risk. They take action to prevent that risk from happening. You say, I can't believe you're taking the action. I'm such a good borrower. You argue over it. The lender says, I could hold your cash. You say, if you hold my cash, I'm not paying the mortgage. You don't pay the mortgage. You go to court. The lender says he didn't pay his mortgage. You say, well, you had a problem. The judge said, well, at the end of the day, you got to pay your mortgage. If you want to complain that you have a problem with them, then come complain you have a problem with them, but there's no reason to hold back your mortgage. He's like, well, I didn't want to fight with my lender because I didn't want to sue my lender. And the answer is, there you go. Maybe you should have actually thought ahead of time about a creative way to listen to your loan documents to begin with, or to get out ahead of it, right? So there's a classic example you see with a lot of people. So the distress really, it presents itself in many different ways, and I see it on a daily basis. So I think, however, with time, it's going to work its way through the system. I think we're going to have a valuation reset across the board, because if everything's in distress, everything's in decline of value, and then the question is, does it pop up thereafter? And the reason things were so expensive to begin with is because it was such a rush to yield. Every single institution wanted to put money in to make money, right?
Right.
But it's not something where you just, play the market and you have a great probability, just hit a button and have a good day. You actually need to operate it, right? I say all the time, there's no such thing as passive income, only passive losses, right? Passive income essentially means you're giving over your property to somebody to deal with and have a good day. If you want to trust them with your money, that's great. That's good. Maybe invest in Vornado instead, because they're more qualified than the average guy. It's going to go in. Oh, because you want to chase a 20% return, a 30% return. Okay. Just understand there's a risk premium. And if risk premium, you got to play enough of a game and figure out where you go from there. So there's a lot of challenges, and I think they'll continue manifesting itself. And those who could figure out how to fix it or even benefit from it and invest in it could benefit in a big way.
Yeah. I mean, that's obviously where you're, on both sides, both on the actual borrowers themselves, if they can figure out how to structure it the best way for them to make money for themselves, for their investors, but also on, as you mentioned, the kind of problem solver, which is the position that you're in, also making money. Because if you can structure it and make money for everyone, then everyone comes out on top. It's a win-win.
Agreed. 100%.
You've also done some fascinating things, and you've talked about this online quite a bit. And something that I'm not so familiar with at all, but you're kind of proud of the fact that you have a lot of different patents. You've come up with different ideas and patents pending as well. Different ideas, whether it be related to real estate, related to software, different things like that. Like, where do you get these ideas, and how does that kind of? It's not something most people do. People have ideas, maybe they start businesses and things, but then filing a patent and doing that.
Well,
What's the idea behind it?
I have overactive mind. So that's the problem, really. I mean, to be honest with you. Now, okay, so the reality is that I'm a very firm believer if you see something that needs to get done, do it, right? Just the way it is. On the flip side, I'm also a firm believer that place things in priority of what should be done at the time it needs to get done, right?
Mm-hmm.
So these patents that you reference have to do with the retail innovation. I'll talk about it in a moment. But essentially, what it comes down to is that retail and e-commerce was broken. Retail wasn't getting enough foot traffic. E-commerce wasn't getting enough profitability. And you need to figure out how to fix it. And I figured out a way to fix it within real estate. But at the end of the day, it's like, hey, I got an idea. I need to put it to work. I'm not going to put it to work tomorrow because I'm not Simon Malls. Okay. I need to figure out a way to make it happen. So I need to preserve my place in line.
Right.
So the way I did that is by filing patent applications and getting 4 of them granted. And we have others that are pending thereafter. And I think, right now we're about to make a push on this front to acquire assets and implement fulfillment within a shopping center, which essentially can merge the e-commerce fulfillment into a shopping center, which would then improve the shopping center and add profitability to the e-commerce side of it. And we'll see how that plays out. But as I tell people all the time, I'm not a startup founder, right? Like I got a very good business. This has to fit within the model. And we were biding our time. We gave it a shot before COVID. COVID came and killed it. We were going to do something in Jersey. Didn't go anywhere. We're biding our time. I think at this point, we're pretty close to making some moves on that. It's going to be from within the real estate context moving outward. And we'll see how that plays out. And I'm sure I keep everyone informed.
Yeah. I mean, it's like you said, it's more just kind of ideas, and bringing it to life takes a long time and takes a lot of effort, obviously. I mean, creating patents protects you, obviously, to make sure that no one else takes that idea once if it's a good idea and has to do with e-commerce and has to do with real estate, then if those intersections can be extremely profitable, as we've seen in so many companies. Now, you mentioned you're not like a startup founder. That itself takes a lot of effort, and you are to a certain extent. You're an entrepreneur.
Yeah.
You've started businesses. You have businesses. But it's very different, taking a software business, which is a totally different animal.
Yeah, very, very simply, I mean, if I wanted to get a $100,000 seed round check, I could fund myself, right? So I don't need that. I need to do it right. And if I'm going to do it right, I need significant capital to do it right and to get off the ground and get moving and rolling it out, right? That is more difficult. So I'm not ready to sacrifice all the good things that I do on the altar of trying to get something done and doing the uphill battle. I prefer to actually put the pieces in place to do this right. And I think the time has come right now. And the reason we've waited this long is because there haven't been really opportunities to buy real estate properties that are performing in a good way at a good price. Okay. And at this point, because the market's declined and because malls haven't necessarily been reinvented yet, and because there's turnover in that market, we believe that we could step in and we could take over some assets and do some creative things. We'll see how it plays out. We'll see. It may be at the end of the day, have 20 years protection, these patents, and 20 years will come by. And Shlomo, very nice. He splurged money, had a great idea. And like you were the first guy to do it. Too early is worse than being too late. So it is what it is. And, somebody else benefits from it. And I say, okay, good. But I did other stuff, right? So that being said, we're really focused on getting it done right now. And we're building out the process as we speak.
Gotcha. Besides for the loan structuring and these different patents, are you also buying properties or investing in actually, stabilized assets to a certain extent?
I don't know stabilized necessarily because it doesn't give me the yields that I need. Of course, I'll give you a stabilized asset if it gives me the yields that I need.
Yeah,
but
it's hard to find, as you mentioned, it's hard to find.
Yeah, I mean, well, why would someone sell at a discount, right? There's no reason. I mean, there's a market, right? There's a market price. Although I don't believe in the efficient market theory, if that's, if you ask me the truth, which essentially dictates that if you're going to buy something at a price, you got it at what the market would pay for it. No, sometimes you could actually buy it at the right price because the market isn't efficient. But putting that aside, yes, we invest in securities that are behind real estate. We invest in real estate. We invest in debt in real estate. We invest in all types of creative structures. It sounds like I do a million deals a year.
Yeah,
I
right.
don't. We pick and choose our pieces, right? Pick and choose, but there's constantly deals on the table that we're working on. But at any given time, working on 15 loan workouts, okay? And while to some people that sounds a lot, to others it sounds very little because they churn a lot. We spend a couple of 100 hours on every single workout. It's an onerous process. It's a long negotiation. It doesn't happen overnight. It happens over it can happen in a couple of years. And that's what you got to do. And that's how we pay our bills, so to speak.
Well, a couple of years. I mean, that sounds like extremely long time to be dealing with a restructuring of a deal. Some
Yeah.
deals themselves, are in and out in a couple of years. So it is obviously it's a different type of, asset that you're dealing with. It sounds like.
Yeah, it's a different negotiation, a different asset. You're negotiating from a position of absolute weakness, provided what you're looking for is to save your property at all costs. But as I say, any negotiation you got to be ready to walk away from. And if you
Right.
take that approach and you know what your metric is and what you're going to pay for it and what you're not going to pay for it, then the negotiation is to get a deal done. It's not like I must have that and therefore you come hell to high water, that's what I'm doing. So that's
What would your coupon be on a new thing?
Shlomo, I'd love to transition now to what we call the final four. These are 4 questions I love to ask all my guests. And
bless you.
First one is, what is the worst job that you ever had?
I don't have a worse job. If I don't like something, I don't do it. I love everything I do. I never worked a day in my life. I never had a worse job. Nothing. Honestly, I can't think of anything as a worse job. If I don't like something, I'm not doing it. I'll find something, I'll start something, but I'm not doing it.
Right. But if you had, maybe you had short stints in doing any type of thing, you mentioned like the sales or anything.
Because I am so lucky, thank God, every day. Again, some years I made more money than other years, right? Just so what it is, right? Every day has been an improvement over the day before. Every single day, okay? And I'm not a negative guy, but I'm not a positive guy. I don't think that every deal is going to close. I know I have to, but at the end of the day, it's like every experience takes me to that next level. And every job I had, even there were some situations I didn't love, but it got me to it. I learned every single day different things. Like today I learned the term "the riches and the niches." I'm going to use it again. Thank you so much. I'll be in the trademark it. Like it is what it is. It's a great line. So I mean, every day I'm learning something. I'm going forward. So no, I don't have an answer for you on that. Sorry, I'm going to cop out. Sorry.
Okay. Listen, that itself is an answer. So I appreciate that.
Yeah.
Second one, I'm not going to let you off the hook with because it's a question that everyone has an answer to. What's a book you've read? Of course, unless you're illiterate, that you wouldn't apply to you. But what's a book you've read that's given you a paradigm shift?
Okay. I have one. And this book I read when I was in my 20s. Now that I'm in my 80s, I mean, it's been a long time ago. So it's influenced my entire life. It's called From the Ground Up. And it's geared me off developing. The book is by a guy, Douglas France. It's about a redevelopment of a post office in San Francisco. And essentially, it's a story of the redevelopment that had too many consultants that went from being profitable to being bled dry by indecisive leadership and showing how development is absolutely risky. That was a fundamental lesson on how development could be scary. People say, development could be very scary. It's additional risk. But I'm not afraid of things, right? Obviously, I work for myself, right? So, but that's one thing. Although I am afraid of losing other people's money. That I am afraid.
As you should be.
The second thing is lack of leadership. When you don't have someone running the show or saying, this is what we're doing, it's rather committees upon committees, you come across like the federal government. And then you have to spend like the federal government, have the money like the federal government, and I have a bunch of people like the tax. So that was a huge paradigm shift for me. And then there's various other books that have been impactful in my life. Winston Churchill, biography of World War II, with 6 books. It's amazing seeing how the guy dealt day by day with various characters through juggle egos and juggle negotiations and all that stuff. There's so much. There's so many books that I could talk about. But that was, if you want to know what the paradigm shift, and it's not the most impactful book I ever read. Everything else was confirmatory. That was it, From the Ground Up by Douglas.
Wow. Okay. Well, that's a first we're hearing on this show. So congratulations on that. It's always good to have a new
Yeah.
book and not a repeat. But that's fascinating. Definitely fascinating how that perspective of just hearing that story can really change the way you look at things entirely. So appreciate that. Third question. What's a skill or talent that you would like to learn?
There's almost nothing that I wouldn't like to learn in my space. Okay. So that skill that I'd like to learn, I mean, once thing, no, there's so much. There's just like anything in finance that I don't know that I'm tangentially involved. I
Hmm.
want to learn it, right? Like I get involved, we buy security. There's an art to the trade, there's various different parts to it, right? I always want to build out around it, like buttress or add information around it. So for example, like I've taken very strongly to reading about the Federal Reserve and pieces and things like that. There's a great book, a Pulitzer Prize winning book. It's called The Bankers. I think it's called The Men Who Broke the World or The Bankers That Broke the World or something. It's about post World War One, about the whole inflation, about the depression. Like just reading how the system is built allows you to within the system navigate the pieces. So
Right.
like so anything at real estate, right? Development, I want to understand how the things are developed. I want to understand better about the systems in the building. I want to understand better about the management process in the building, right? Yes, I've operated buildings, I own buildings. I mean, this is what I do, but I always want to learn around. So that gives me the ability from within to make those decisions. So there's just anything that I'm involved in. If there's a book around that, I mean, I want to learn about it. So yeah,
Okay.
I mean, so it's just so much like yeah.
And it's fascinating. I mean, kind of focusing in, just learning more about your trade. Another great book on that topic, you're talking about the Federal Reserve and all that kind of stuff, the banks. We had another guest on our show a couple of years back who mentioned, first time I had heard of it, the Creature from Jekyll Island, which is also just an incredible
Yes.
book that
That's
goes through
about the
breaking
meeting. They
down.
had the meeting to create the Federal Reserve. There's
Yeah,
another one called Limitless by Gianna
right.
Smialek. I think I can't write. It's a new one over there. But yeah, so there's a lot of these books, and it's just amazing when you think about what the Federal Reserve was created for, about moving money from one side of the country to the other side of the country,
Yeah,
and who are able to control them, what the process is, and all that stuff. But the reality is, once you understand the piece, you just understand it's a bunch of guys trying to manage a bunch of other guys' expectations, right? Because the second you give them too much money, they go crazy like tulip bulbs. And the second you take back money, they're like, oh my gosh, this guy's falling. And it's just a matter of managing it. But each of those guys have their own incentive
right.
set. So it's just like, yeah, I could go on and on. It's the world is a fascinating place and we'll never learn it all. We'll just, hope to make our mark within it. And yeah, so that'll lead to your next question. Yeah.
Play your part. Yeah, that's exactly right. The next question, a final question, is what does success mean to you?
I think success as a given, of course, success is my business. I'm talking business success is my business achievements. Of course, that goes without saying, right? The things you could do, the deals you could do. But to me, it's difficult sometimes because I don't really advertise the work I have to do. Like, hey, I represented Joe Blow, who's underwater on this property. And he got a 50% discount from this lender that I hope to negotiate with again. So I'm going to make him look bad in the whole market and explain that, right? I actually typically don't advertise unless it's something really significant or I don't talk about it. I don't talk about my deals. So that's part number one. I think the real success for me is going to be, and this leads to money and business and success also, are the people that I could bring in around me to succeed as a result of what it is that I'm doing. Because
Mhm.
we're all one person. And this is like so many people don't understand. It's about sharing or partnering, right? And I'm sort of going to take something that is very transactional, but show how it very much isn't, right? So if you let people share in what you do, okay, they will share with you on what they do. So if you are lucky enough to have established a niche and a talent and a capability, and you can help people around you who have their own capabilities and talents, and you can help them grow within it and turn into something that helps you grow as well. But it's also obviously it's very rewarding. But I don't hate to be altruistic. It's good business, right?
Yeah.
So yeah, I'm not Bill Parcells with a bunch of different coaches that came out of his lineage and great. But the point is how many people you can influence and grow will actually dictate your success. So like I learned, like our friend Ken Ashley, right? He is a notorious introducer. Hey, meet you, right? He puts people together. He's done it for me. He's helped me make money back. That's what it is, right? And so you learn from him. He just gives first. That's what I do. I give. Oh, Joe, talk to Mary. You guys should have a conversation. You guys make money. They appreciate it. Do a deal. Call you 3 years later. We did a deal. I don't say, oh, where's my commission? I don't care. I'll make more money. You make more money. your money. I'm not for introduction. I don't make commissions on that, but I know that you're forever going to be grateful to me. So the time when Joe goes to work for somebody else and I need to call a favor, he'll be there for me. It sounds transactional, but what I'm trying to do is explain to people that being nice actually is a social construct. And therefore, when you keep the construct moving in circles. So yeah, success for me means, ultimate success means to me that I'm the guy that facilitates a lot, because that then results in ultimate success on the business side.
Absolutely. 100% agree. It's a philosophy that I live by as well. The Go-Giver philosophy, Bob Berg's famous book. You never heard of it? I got to
So let me tell you, my philosophy in books is never listen to people tell you how to do it. Listen to people that did it and learn from how they did it and try to apply how you do it. So I don't know.
Right.
I mean,
yeah,
yes,
no,
I don't.
I'll send you the book. It's an amazing book. It
No problem.
literally,
Fair enough.
it was more a confirmation than
Got it.
anything else, because it's like, oh, this is what I've been doing for, it's just kind of telling you, oh, this is amazing. So I think you'll appreciate it with that regard as well. It's like, oh, okay,
I'll read it.
different aspects to
I'll
it.
read it for sure.
It's
Yes.
a very quick read. It's like you're written as a parable as well. So it's very, very good.
Did I tell you I read a 6th edition?
Yeah, I know.
Space, what's the George Lee? I tell you, with memos from this guy, that guy. Yeah, reading is not a problem. I'm an avid reader.
Amazing. Well, Shlomo, how can our listeners find you or reach out to you if they want?
I think the best way is to message me through social media. That's the best way. I keep an eye on it, and typically my assistant will reach out to schedule some time, or I'll reach out, or something will coordinate. I'm pretty accessible. Unless you want to sell me, I don't know, SEO services, in which case I'll probably ignore you. Or, some people like setting appointments on my calendar out of the blue, and so that's automatic decline. But I do get guys sending me like WhatsApp loan documents. Hey, Shlomo, could we talk? I don't know who you are, but thanks for the loan document. I appreciate it. And what do you want me to do with it? Right. So
Right.
it's like, that's typically us up. But no, so people reach out to social media. I'm at Shlomo Chopp on X. I'm at Shlomo Chopp on LinkedIn. Those are the two places primarily where you're going to find me.
Yeah. And listen, it's not so bad to have people kind of sign up for random calls. I get the same thing. And literally just yesterday, I had a guy, and my thing is clear, it's like cost segregation, 15 minutes introduction, introductory call, right? The guy signs up, and I get on the call with a guy, and I said, how can I help? Cost segregation. He's like, oh, I was calling you about this property that you were listing, at such and such an address. And I'm like, I think you might have scheduled the call with the wrong person, because I don't have any properties for listing. He's like, wow, that's strange. I don't know. Why did I do that? And, we talked about that for a minute, and I'm like, yeah, I don't have any properties. He's like, well, tell me about cost seg. I don't really know much about that. And that led to, having
There you go.
Potential clients and potential leads coming off that. So you never know
Yeah.
a random person coming to you with a call. But yeah, no, I definitely agree with that.
Yeah, I'll say two things. First of all, obviously, I mean, I got crazy back-to-back schedule, so that's a challenge. But I will say a lot of people reach out to me for advice. A young guy, heck, I'm someone that started out as nothing, and I built myself a semi-decent career. So they want to know, like, what can you tell me, right?
Mm-hmm.
Don't ask to schedule a time with me. I mean, I'm not here to give advice, but you can ask me a question directly, and I'm glad to give you advice text like that. I could do it when I'm available, when I could do it. So I encourage, I'm glad to help anybody that has a question. Don't call me, hey, where can I find NPLs? I'm like, sorry, I'm not a directory for distress debt. Thank you. But I'm here to help. Anyone has any questions, I'm glad to do that. And yeah, I appreciate it.
Awesome. Well, thank you again so much for joining me on the show. And it's really been a pleasure. I learned a lot, and it was definitely added value, which is what we're focused on. So appreciate you coming on again. And to our listeners, thank you all for joining us all the way to the end once again. And remember, until next time, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yonah Weiss, and I'd love to hear from you.